One of the biggest questions I get asked every single day is when should I buy or when should I sell my investments in order to optimize my portfolio and be able to take some profits? And honestly, this is a question at the back of everyone's minds, including people like Elon Musk, Cathie Wood, and even people like you and I. When is that perfect moment to pause and say, this is the top of the market, or I've made enough money and I want to lock in some profits? First and foremost, I want to prelude the fact that I'm not selling any of my positions when it comes to cryptocurrency. HODL, baby. I am still extremely bullish for what the entire market has to offer, and even more so on the coins that I've talked about on the channel before and the ones I'm continuously talking about going forward. But I wanted to raise some awareness and talk about a very important subject, and that is, when is it the right time to actually take some profits off the table? And that's what we'll discuss in today's video. Not only why is it important to take profits, how essentially you can maximize your own portfolio profits by having an exit strategy. So the very first point that I want to make is to answer the question, is it okay to take profits? Because a lot of people say you should just dollar cost average into whatever investment you're talking about and keep buying it and buying it and buying it until you're ready to retire. But along the way, is it okay to take some profits off the table? And the simple answer being yes. Of course it's okay. You have my permission if you wanted to take some profits. And most importantly, you should feel comfortable with taking some profits off the table, especially when we go through an exuberant run. But what is the best time to do that? Well, the best time to take profits is when you've made an absolute immense amount of money. Let's say you put in $100 or $1,000 into that, whatever your starting amount is, and then it turns into something that would extraordinarily probably change your life. For example, if you've been really wanting to buy a house, but you've never had enough money for a down payment in order to do so, and you've put a few $100s away into investments, and then overnight, or seemingly overnight, your investment grows into a wafty, 10, 20, 30, 40, $50,000, and you say, wow, I can not only put down a down payment onto my house, but I can also use some of that money to make a lot more payments for the next few months or even years to come. If that would increase your quality of life, that is when to take profits. But since we're on the subject of cryptocurrencies and blockchain, you must remember that this space is extremely new and extremely volatile as well. So if you're getting excited about taking maybe a 5 or 10% return on your investment in this space, that might not be the right thing to do. The fact of the matter is, cryptocurrency as a whole, the whole ecosystem right now, being in this infancy stage, that trying to take profits on, those types of gains and those types of returns doesn't really make sense, especially if you're planning to invest for the long term and trying to time the market or a particular cryptocurrency where, the price goes up 10% overnight and then you sell it and then the next day it goes up another 50% or maybe it does go down 50%. Well, trying to play that game is going to get exhausting. And like I mentioned before, if it's not life-changing, it's not worth trying to chase those highs. I promise you. And in my personal opinion, even 100% returns in this stage of the market, again, depending on which cryptocurrency we're talking about and the fundamentals behind that cryptocurrency, but even that 100% return might not be worth it in this stage of the market. Now, of course, when we're talking about stocks or maybe other types of investments, 100% return might seem really nice, but when we're talking about something so small, when compared to much older assets and investment vehicles that have been around for a long time, that return can be seen as very small in the grand scheme of things. But in order to understand what is a good time for you to take profits, we have to talk about the implications of what exactly it means to take these profits off the table. The very first thing that you got to remember, and this is really important, especially if you live in the United States and if you live in other countries where taxes are due, are the tax implications when you do sell out of a position. Now, for example, in the United States, if you hold a position longer than a year, you have to pay less in taxes than for an investment that you hold less than a year. And this is not something that's like 2% more or 5% more. It can be tens of percent more, which is a huge, huge deal, especially if you're holding something for maybe a few days, or if you're sitting at 10-month or 11th month mark and you're considering, oh, I've made so much money, should I just hold it for a couple more months? In those instances, I would highly, highly suggest, again, I'm not a financial advisor or anything like that, and it's always important to do what's best for your portfolio, but remember to take into account the tax implications of your country and of your investments as well. Here in the United States, if you made $1 million on your investments and you did a long-term capital gains tax, meaning you held that asset for longer than a year, it could be the difference of paying $200,000 in taxes or selling it before that 12-month mark and paying nearly $400,000 to $500,000 in taxes. And if you're not in the United States, or even if you are, make sure to reach out to a CPA that is very well versed in portfolio management and more specifically in cryptocurrency laws. I wish I could answer all the questions that you might have in this section, but that would probably take up the entirety of this video. But if you have any questions, make sure to leave them down in the comment section below. And if I know the answer to that question, I'll go ahead and give you the answer. But next, let's talk about the next question that might be on your mind when considering selling your investment. You might be asking, but where to next with my investments that I just sold? Remember that when you sell cryptocurrency, now you have fiat, or your native currency. And the question I like to ask myself personally is, what am I going to do next with my money? Like, what is the next asset that I can buy or the next business that I can create to put my money to work? And the question you might want to ask yourself is the same one where you list the things that are next for your financial journey. A thing to remember with this is the longer you take to think, the more that inflation eats into your investment. Every minute, hour, day, week, month, year that you sit on your fiat, the more your currency depreciates with time. This is a huge, huge thing to consider when thinking about selling your assets, kind of like what you're going to do next, even before you decide to sell a particular asset. So that could mean just maybe selling it and reinvesting it to another currency, or outside of cryptocurrency, it might mean to maybe buy some real estate, maybe get into tax liens, maybe get into rental properties, maybe get into fix and flips. You could also buy stocks, you could buy bonds, you could buy so many other investment vehicles. And that's not to exclude a business that you might want to start, or maybe you want to invest into someone else's business. There are so many options that you might have out there, and writing them down is a crucial part of your financial journey. And if you don't have one of those, I would consider starting before you even invest. That way you have a clear trajectory of where you might want to put the money that you make from investing. But maybe you're like me and you think there's a massive amount of potential in this space, and even if you make thousands of percent, you think, well, I would just want to put it back into crypto. Don't be afraid of doing that either. Remember, just like the stock market has different industries, sectors, and companies that are working on so many different building blocks of our ecosystem, whether it's on the internet or in person, the blockchain offers very similar options when it comes to investment vehicles. There are companies working on VR, DeFi, Internet of Things, a whole lot of different projects that exist specific to a different industry. And the crazy thing is, even if you own 10, 20, 30 different projects, you might not even have half of the industries that are available to you in the crypto landscape. So don't be afraid to explore new niches, even if you made all your money in, let's say, DeFi, for example. And doing that will allow you to see new opportunities as they arise. I mean, if you think about it, 40, 50, 60 years ago, holding a massive amount of bonds in your portfolio was the right play. Since then, stocks have been a really good use of your money. Now, more recently, over the last 10 years or so, cryptocurrencies have dominated the space when it comes to ROI. And if you're staying up to date with this current technology and exploring more options for your portfolio, you're going to run across some of the greatest opportunities of your life if you continue to do so. Now, if you don't and you stay stagnant and you say, okay, I'm only going to invest in this space, and once I make enough money, then I'll move it all to stocks or bonds, and that's all I'm going to do, well, you might be missing out on massive opportunities going forward. So again, don't be afraid to diversify, even though maybe all of your money is made in stocks or maybe all of your money is made in crypto. Don't be afraid to diversify into other assets, because at the end of the day, who knows what will be the next gold mine. Now that you have some sort of idea of what you want to do with your money, and now have a basic understanding of how to think about taking out profits and what to do with the money once you've taken those profits out, now let's talk about some of the signs to look for to actually know when it's the right time to take the profits off the table. And sign number one, which I think is going to be the most useful for you guys that are traders or people that jump on the hype trains of like GameStop or maybe Dogecoin or Shiba Inu or any other cult-like followings, and that is parabolic price action. This is what some of us like to call mooning in crypto. This can sometimes be overnight or in other cases day by day, but essentially this is when the latest green candle, the high green candle just goes absolutely absurdly past the previous highs that we've seen in the past. And remember that parabolic price action is very common in markets, especially when talking about cryptocurrency. It's even more common when the overall market cap of a particular asset is very small when compared to the overall industry that it's competing in. Usually this can be found when you have an asset that has a cult-like following and a small market cap, and because of those two factors, it has a higher probability for parabolic price action. And once that parabolic price action does happen, it has just as much potential that it had to go up as to go back down, which is exactly why it's extremely important to have risk management strategies when you are investing in these particular assets. Now, if you want me to do a whole video on this, I totally can. Just let me know by smashing the like button so I know that you guys want to see content like that. But the next thing to look for is something that we talked about a little bit earlier, and that is covering life-changing appreciation. Depending on your portfolio size or your goals, which is something that you should have outlined, that could be anywhere from 2x, 5x, 10x, 100x, 1000x. Again, remember that taking profits off the table doesn't mean you're missing out on something or you're losing money because that asset continued to go up in price. In fact, it's quite the opposite actually. By selling a position, you are not only just locking in profits, but because you have an investment strategy in place, you're likely repurchasing other assets that have more potential for profitability long term. So that is something that you must consider when you are taking profits, and make sure that you are reinvesting those profits, as long as it aligns with your goals, into new assets that could appreciate more over that same said period. And when I say life-changing returns, I'm talking about what is right for you. I'm not saying that you need to have $100 million or $100 billion to feel good about yourself. Everything is relative to what your goals are, which is why it's so important to set them. And one of the hardest things I have to point out is make sure to hold yourself accountable to when those goals come to fruition. As humans, we like to maybe get greedy, or maybe we see those things like, oh, we don't deserve this money, and we decide to hold on to a particular asset and never sell out. And then because of the parabolic price action, or because we weren't true to our word of selling out when we said we would, then this asset could tank in price, and then we miss out on some of those life-changing returns that we talked about earlier. So make sure to stay true to your word once you reach a certain goal that you had in mind for that asset, and don't be afraid to take profits in order to actually realize those gains. That's why they're called realized gains. And remember that you don't have to take all of your chips off the table. Maybe you only take your initial investment off the table, or maybe you take your profits off the table and maybe leave your initial investment in. It's always up to you to decide. And again, that goes back to strategy. What is your strategy? What are your goals? And what are you trying to accomplish? But let's talk about number 3. And this is a telltale sign that I see over and over again, and usually is a great time to sell, and can very much help you with when trying to time a particular asset sell. And you might be thinking, what am I actually talking about? And that is when everyone was doubting that asset, right? Maybe a few months ago, maybe a few years ago when you first told them about it. That's why it's good to talk about your investments, is when everyone, including the media, Fox News, your neighbor down the street, whoever is doubting your particular investment choice, right? They're just kind of like, yeah. And then 6 months later or a year later, now that the asset has gone up in price drastically, and you're thinking, should I sell some of my profits? And that same neighbor, or maybe Fox News or whoever you're watching, is now talking about that particular asset like this is the next big thing, even though it was the big thing back when you started buying it. That is probably a good time to hedge against that position, or maybe even at least sell some of your position. And if, again, you're not sure this might be the peak, or maybe a few more people are going to get in and then that will be the peak, just remember to assess during that time when you're thinking about all these things if you are okay with losing the gains that you have already accrued, or would you rather take some chips off the table and be a little bit more cautious, so that way you can realize some of those gains and reinvest them into the next thing that Fox News or your neighbor tells you to not buy. Okay, so now you've gotten hopefully a ton of value from this video so far, but it's not over yet. I'm gonna share with you, if you stayed all the way through this video, I'm gonna share with you a couple strategies that are super vital to know when you are considering profit taking. And strategy number one is the most modest and most common strategy for profit taking, and that is to first set expectations for that particular asset and where it's gonna likely go in relation to its competition. So if you're investing in an underdog, is it possible for that current underdog to get to its nearest competitor? Or maybe it might outbeat its competitor. Where is it likely to go and why? If you can nail that down, that will help you with the decision-making process down the road. Because if they meet those criteria, then you can say, okay, the original goals that I had for this company have been accomplished. I'm okay with profit taking. And of course, it's hard to do with assets like Bitcoin that happen to hold the #1 spot in cryptocurrency, which is why a lot of us hear the numbers 100K, 500K, a million, 10 million being thrown around, and we think it's normal. But always remember to try to keep history in mind, like previous market caps, the overall market size as a whole. Maybe try to compare cryptocurrency to the stock market. And the proper way to execute this strategy, even short or long term, is to place something called a limit order. If you're not sure what a limit order is, let me know down in the comment section below, but I'm sure most of you guys have heard of what limit orders are. And if you'd like to see a full video on it, let me know that as well. And I'm happy to break down the difference between market and limit orders. But for those that are more familiar with that, make sure to base those limit orders off of exactly what your expectations were set. And don't be afraid to set multiple limit orders when you are thinking about selling out of position. Personally, I use limit orders all the time, and you should too if you want to take advantage of this strategy. But now let's talk about strategy number 2, which is something that is not commonly talked about because this is for the momentum runners. This is commonly used for trading, but for the strategy to work, it is your job to watch out for euphoric parabolic runs. This is when most people buy in because they hear people making ludicrous returns and they want a piece of the pie. And the thing to pay attention to when you are looking at these euphoric patterns is to look for lower highs and lower lows. And that is usually a clear indicator for a bearish trend. Lastly, if you see this trend actually taking place in a parabolic runner, that is when you should consider taking profits. And again, this is based off of your goals and the rules you play by when it comes to risk management. And of course, it doesn't hurt to look at the RSI to see if something is overbought or oversold. That is sometimes a go-to indicator for myself and other traders like me. And I'll likely do a full video in the future on bullish and bearish patterns and things to look for when trading if you're curious about trading. So make sure to smash the like button, subscribe, and also follow along by hitting the notification bell. And so hopefully you guys got a ton of value out of this. And if you did, YouTube thinks that you might enjoy these 2 videos as well.